Singapore, this is Insight with me, Haslinda Amin, a show where we dive deeper into the stories that matter with crucial context and sharp analysis. Asian stocks gaining for a third day, boosted by fresh bets on Chinese tech. BYD jumping to a record after unveiling a fast-charging system for electric cars. And China's world-beating rally could get fresh catalysts from earnings this week, led by Xiaomi and Tencent. We'll dig deeper into China's economic outlook and its latest measures to revive consumption with our expert panel. Becky is Stanchard's head of China macro strategy, and Ning is a Shanghai-based professor of finance. Plus, Presidents Trump and Putin are set to speak later Tuesday as the U.S. leader pushes for a Ukraine ceasefire deal. We'll get insight from the Munich Security Conference CEO Benedikt Franke. Well, Asian stocks rising for a third day, helped by gains in Japanese shares and investors placing fresh bets on, you guessed it, Chinese tech companies. So what's driving the rush into China's tech stocks? Avril Hong with all the details. Avril.
Yeah, Has, I think you can kind of take your pick of positive drivers for Chinese stocks today, but it does seem like the stars are finally aligning from them. If you look at the Hang Seng, it's jumped to the highest in 3 years, and the gains are being led by the tech shares, as you alluded to, but also Chinese shares in Hong Kong. And it does look like this combination of consumption plan and earnings optimism. Remember, we have a big number of tech firms that are reporting this week, and indeed it does look like these animal spirits maybe have returned to Chinese markets, even though some have highlighted that when it comes to China's consumption plan, at the briefing yesterday, they maybe didn't focus enough on how authorities are planning to raise income levels. And as you know, consumer confidence in the country is still at the lowest in a generation. Now flip the board, take a look at some of the stock movers today. I think the star of the show is Baidu, 10% gain, tracking the climb in its ADRs, although there's a note of caution from our Bloomberg intelligence colleague Robert Lee. This is a stock, he says, that trades at lowly valuations, so susceptible to wild swings from news flows. That being said, it's not just about Baidu today. Look at the likes of Alibaba, and social media abound with chatter of its AI agent Quark. And then for BYD, of course, this 5-minute battery charging system has gotten investors very excited. So to answer your question more pointedly, I think it's about the technological advancements that we're seeing Chinese firms really making headway in.
And amazing to see that Xiaomi has surged 300%, quadrupling in about a year. Avril Hong, thank you. Let's get insights on what's driving the optimism around China's markets and economy with our panel. Becky is head of China macro strategy at Standard Chartered Bank, and Ning is a professor at the Shanghai Advanced Institute of Finance and a globally recognized expert in China's economy and financial system. Ning, let's start with you. This is a 30-point strategy when it comes to that strategy out of China. I'm just wondering how you're assessing. I mean, it is encouraging, but is it enough?
Well, yes, I totally agree. I think it is very encouraging to see that the policymakers are now focusing on consumption. I think not that consumption has been evading. It's just, I think there are far more urgent issues to deal with in the past few years. For example, the debt issue and the housing sector. But now that China's economy is finally back on track for around 5% growth, I think it is really a no-brainer that consumption has to be the only driving force leading China's economy from the current level to the high middle income, or eventually breaking the high income level. So I think it is quite encouraging, and there are a lot of areas to be touched in the plan. And I think that's also bringing some of the sectors up in the past few days. I think a couple of questions remain to be seen. One is, well, yes, I think there are a lot of discussions about how to boost the income and the financial income and labor income of the households. But then with the economy not growing as fast as before, and with the housing still in the backdrop, not doing too well, I think how do people really feel that they are making more money and having the confidence of spending? So I think that is one key question that remains to be answered with so many detailed points of plans. The second part is, I think, it's not just about how much money people are making. It's also about, especially living through COVID, people are now becoming more cautious than before. So they're worried about their health. They're worried about their job prospect. They're also worried about the future of the housing market. So in a way, how to really stabilize and revitalize the expectation and the confidence of the households, of the consumers. I think a lot of areas have been touched in the plan, but then I think it remains to be seen. That is not one area that the government has been very familiar and very experienced in trying to boost social welfare, trying to boost confidence, trying to make it is really the incentive of the households to spend their money and open their purses.
Right. And Becky, of course, a lot of the rally we're seeing in the market has to do with the optimism that consumption is finally getting addressed. Some say that the measures we're seeing right now are the most comprehensive since the 1970s. What's your take on it? Is this a pivotal moment? Is it a turning point for China?
We believe this will likely to be a turning point towards a more consumption or domestic demand-driven economy for China. But we're also aware that this is also likely to be a very slow burn process. So as Dr. Zhu has noted, I think this is a very comprehensive package, and it's a holistic package. We are seeing, for example, stimulating not only demand through short-term fiscal spending, but much more importantly, it's they talk about wage growth, they talk about amendment of household balance sheet, and therefore this will be a very slow process. The good thing from China's economy's point of view is that we believe we are off the moment or the moment of the most risky real estate decline, as well as local government debt issue are now behind us. So these will become much smaller dragging factors, but the domestic consumption would take time for it to really go into its normal days. For example, if we look at some of the key indicators, retail sales remains something around a quarter below trend. A number of services sector consumption, for example, movie box office sales remains almost 50% below trend. So the base is very low. That gives them a lot more room to stimulate from the current very low level. But we also need to understand amendment of household balance sheet to the extent that allowing people's ability to improve to consume takes a long time.
So as much as we talk about retail sales improving, that 4% that we saw, it is still from a very low base. Ning, I'm just wondering what your thoughts are on how consumption can be boosted. It is about giving the Chinese consumers confidence that they can spend, that they can be spending what they have been saving.
I think the government has already... sorry.
Please.
Ning, go ahead.
I think the government has already taken a few encouraging steps in the past 6 months in a way that they have already rolled out a series of subsidies and encouraging products for households to replace their existing products or services. And now this list of products have been expanding, ranging from the traditional electronic products to new energy vehicles, and now some of the matters related to home renovation and refurbishment. So I think that is, that monetary incentive is definitely very effective and quite spot on for households to have the incentive to spend. But I think two other areas are really, as Becky said, it takes longer time, but probably very important. One is just the reassurance about, okay, they don't have to worry about the future. They don't have to worry about not having the money to spend in the future. So we have observed a very big increase in excessive saving in Chinese households in the past 3 years, partly as a result of precautionary savings. They're just worried about what's going to happen in the future. So I think that is taking a long time and also requiring fiscal stimulus to be more aggressive or more targeted. And another thing is, I think that consumers are changing their ways of spending. So I think how to encourage Chinese entrepreneurs and companies to produce the products which are of greater value and of better suitability to the consumers. I think that's also being mentioned in the plan, which I think will require some time to roll out.
Becky, how critical are the childcare subsidies? People say perhaps it is a low-cost, high-impact move by the government.
it's part of the plan. So together it will be effective. So it's a combination of childcare, elderly care, better social safety net, especially for the low-income households. So in general, the goal is to improve people's ability to spend in addition to their willingness to spend. So at the end of the day, the whole package is targeting amending household balance sheet, reducing the basic cost of living in China so that people are able and willing to spend more. But this will take a very long time from our perspective. And the flip side of that is that they are sort of forced to do that by stimulating domestic demand. They will be able to partly offset the loss of potential external demand on the back of this highly uncertain external environment on the back of tariff hikes.
And Becky, within the government, within China itself, the issue really is the property sector. If there's recovery in the property sector, that perhaps could boost consumption in China as well. The thing is that doldrum, that slowdown, is in its fourth year. I mean, is enough being done?
We think more needs to be done. So we started to see some small constructive signs. For example, in Tier 1 cities, the average inventory level is now returning to historical average. And therefore, we are started to see stabilizing situation in Tier 1 cities. But we only have 4 Tier 1 cities in China. By looking at the inventory level at lower tier cities, they are so far below, so far behind the historical norm, and it definitely takes much longer. And if the U.S. is any guide, then it took the U.S. 6 years for the Fed to cut rates to 0 QE1 to 3 in order to finally stabilize the U.S. real estate market. We believe this could be a good guide for China's situation, and therefore PBOC need to ease monetary policy aggressively, especially bring rates down to a much lower level. Know that the current real rate is too high. It's the highest since 2015, and it's definitely not good for the economy.
So the rates are still too high, Ning. I'm just wondering, is it also a case of the government focusing too much on the supply side?
I think China's policymakers have been very experienced with the supply side of the policy making, whereas I think it is a little bit a novel direction for them to be more experienced with the demand side. But more on the interest rate, I think there are two constraints which are still lingering on the mind of the policymakers. One is the uncertainty with the Fed decision with the potential interest rate cuts from the U.S., which is setting the tone for the global monetary policy in general. So I think that part remains uncertain and probably become more volatile after President Trump took office. The second thing is, I think, there's still a bit of the discussion about, well, if you're going to boost the financial income for households, then you're going to generate even greater inequality in wealth distribution. So that is not necessarily the situation that the policymakers are very keen in having. So I think it's in general the direction of the policymaking is going towards more easing, both on the monetary side and on the fiscal side. However, I think there are constraints and setbacks in being too aggressive. I think that is sort of the dilemma that policymakers are facing in trying to boost the consumption.
Ning, we've been talking about the domestic challenges. How about the external environment? Here we have, of course, the U.S. imposing 20% tariffs and China responding with 15% tariffs on U.S. imports on agriculture, for instance. How might that play out? What would the ripple effects be on China's economy?
I think so far China has been quite restrained with its retaliation of the 20% tariff increase from the U.S. And to be fair, I think the 20% increase is not as bad as what people have been fearing for the potential 60% of increase. So in a way, I think China is taking a very balanced and restrained approach to rebalancing the trade with the U.S. That being said, I think there is another layer of the uncertainty, which is the rest of the economy or the rest of the world. And we have been hearing that countries such as European Union member countries and some of the developing countries are also a little bit worried about their imbalances of trade with China. So I think that is a longer issue for China. For the moment, I think the blowback or the headwind is not as bad as people were fearing for. But then going forward, I think there has to be a resolution with rebalancing the global trade and potentially resetting the global financial order.
Of course, the concern is that China would start dumping its cheap products onto other markets, including here in Asia and Southeast Asia in particular. Ning, do you see China needing to do that to help boost its economy?
I don't really think China need that, but I think, one is China's producers are really cost efficient and quite innovative, which is giving them a clear advantage in the global competition. The second is more and more Chinese companies are setting fresh field investment in many of the emerging markets, especially Southeast Asian. And so I think that is not necessarily China's way to deal with its own economic challenges within home. It's more of a sort of a relative competitive advantage. Of course, that is setting some issues for the countries which are feeling the pinch on the employment and on their own innovation and development. So I think this is why it is a changing period for multiple sides to work together to have a new global order.
Becky, we started the conversation with you saying that this is possibly a turning point for China. Will it reach its 5% target if it's taking the right moves?
We are currently still comfortable with our 4.5% GDP forecast for this year. So we do expect some erosion of external competitiveness on the back of tariff impositions. But at this stage, we do see some upside possibilities on the back of a expansionary fiscal policy. We believe the fiscal policy together with monetary policy will become much more proactive this year and will likely to boost domestic consumption and to reach at least about 4.5%. It remains to be seen whether they will reach 5%. We need to see the ongoing negotiation between U.S. and China to unfold and potentially additional economic stimulus from the domestic market. But at this stage, we are at least very comfortable with 4.5%.
What exactly is proactive monetary policy? Do you expect the PBOC to cut RRR, RRR by at least the same amount that it did last year?
We do. One of the prerequisites at the moment is FX stability. We have seen FX stability being treated as the uttermost important priority over the past few weeks, including, for example, PBOC tightening interbank liquidity conditions in order to anchor the FX. But things have started to change. For example, this morning, fixing came with a weakening bias. I think the bias is the most in multiple years. And that means the depreciation pressure of the CNY is now subsiding, and that will open up the window for the PBOC to be easing monetary policy, including both RRR cut and rate cut. So we do see possibility for the PBOC to be cutting more OMO MLF rate this year than last year, for example, 40 to 60 basis points, especially markets' expectation on the Fed to be cutting more in the second half of this year is also building.
And Ning, that question on yuan stability, it has been stable because the PBOC has been pretty active in ensuring its stability with its fixes. But now we have Trump saying, you know what, be careful, I'm looking at currency manipulation. How do you see PBOC moving in terms of how it supports the currency from here?
I think it's a fairly big...
Ning?
Oh. Sorry. I think it's quite a big and a complex question, and I think China is, as Becky said, is putting a high priority to the stabilization of the exchange rate. That said, I think a lot of the recent moves of the exchange rate is more coming from the U.S. dollar side rather than from the Chinese RMB side. So in a way, I think Donald Trump could be blaming China for the manipulation. But then if you look at the data, I think it's more about the uncertainty in the U.S. that is causing not just the exchange rate fluctuation with RMB, but with other major currencies. So I think in terms of the PBOC, I think there are probably two things they're trying to do. One is they are trying to have more targeted changes in the monetary policy. So it is no longer very common to have a widespread rate cut, but then the rate cut can be fairly targeted at trying to boost consumption, trying to help SME, and trying to salvage the real estate sector. And the second is, I think RMB is becoming more and more market determined in a way that I think there are a wider range of institutions that is making decisions based on their best guess of the future.
And Becky, your thoughts on what the PBOC can do to support the currency from here?
It's quite interesting that a stable CNY is now one of the common or mutually agreeable topics between Trump and Xi. So CNY stability is one of the most overwhelming consensus view in the market, at least in the short term. So from the PBOC's perspective, if dollar continue to stay soft, they don't actually need to do anything. PBOC has been quite a bit away from intervention based on our observations in recent sessions. And under the situation, if DXY continue to rebound again, for example, if euro for any reason weakens again, that we could see a repeat of what happened in last December and January, to the extent that they would tighten interbank liquidity conditions, capping official fixing under 720, and at the same time to step up a little bit of intervention. But we do not foresee a very strong wave of depreciation pressure to come in the foreseeable future.
That's right. It's not just about the dollar. It's also now about the euro. Becky Liu, Standard Chartered Bank, and Ning from Shanghai Advanced Institute of Finance. We thank you so much for your insights today. Still ahead this hour, as President Putin prepares to talk to Donald Trump about a Ukraine truce, we get analysis from the Munich Security Conference Vice Chair and CEO. Much more ahead. Keep it here with us. This is Bloomberg. They're coming home, and we're talking about U.S. astronauts stuck in orbit for months, finally set to come home. Of course, two NASA astronauts, we're talking about Butch Wilmore and Suni Williams, will soon return to Earth after spending over 9 months in space following a series of unexpected events and technical issues with the original spacecraft. Of course, in total, we're talking about 4 astronauts coming back. The astronauts were originally supposed to spend only a week in space, but the trip was extended due to technical issues with Boeing's Starliner, and they'll now return on a SpaceX Dragon capsule. Of course, you may recall this has become quite a political issue that was highlighted by President Trump. Now, the ordeal has highlighted NASA's reliance on SpaceX and has become politicized, with President Donald Trump, as I said, and SpaceX CEO Elon Musk making public statements about the situation, which has added to the drama and attention surrounding the astronauts' return. Now, again, we're talking about the 4 astronauts, Nick Hague, Suni Williams, Butch Wilmore, and cosmonaut Alexander Gubernov. They'll begin their final preparation for their return to Earth, currently targeted for Tuesday, March 18th. That is today. Now, the 2 astronauts, Butch Wilmore, Suni Williams, will be coming back to Earth after 9 months in space, and those are the live pictures we're seeing right now in terms of those astronauts. From astronauts to markets, let's do a check on how markets are doing right now. We know that Asia tracking gains in the U.S. There's optimism about China's economy, that U.S. data also easing recession concerns, that U.S. consumer spending has not collapsed. The Fed in focus on Wednesday as well, set to hang on to those rates. Take a look where we are in terms of the Hang Seng Index, leading gains here in Asia, up about 2%. Of course, the gainers are the tech shares, 2.8% in HS Tech that we're seeing at this point in time. We're seeing a massive rally. Xiaomi in focus as we await that earnings. Coming up, Israel launches military strikes on Gaza, shattering a nearly 2-month-long ceasefire. An update next. Keep it here with us. This is Bloomberg. Welcome back. You're watching Inside. Let's take a look at how futures are pointing as we await that decision from the Fed. It is expected to stand pat. Of course, some say the Fed remains cautious. It wants to know how that Trump tariffs will play out. Futures currently pointing to a lower open, currently down 0.3% for the S&P, losses too for the Nasdaq futures as well as the Dow Jones. Of course, we're awaiting that Fed decision. We're also keeping an eye on China in particular. It has been an outperformer compared to its peers globally. Markets this year, we've seen a massive rally in tech shares in particular on the back of deep-seek investors turning their attention, of course, to the upcoming tech earnings, including that of Xiaomi, to see if the rally we've seen so far in Chinese tech plays remain sustainable. Also, one stock that we're tracking today is BYD. It's jumped to a record after unveiling a 5-minute EV battery and ultra-fast charging system that could power 400 kilometers of range in just about 5 minutes. So lots to mull over and keep track of when it comes to those Chinese tech plays. And the U.S. Federal Trade Commission preparing for a trial next month aimed at forcing Meta to sell its Instagram and WhatsApp businesses. FTC Chair Andrew Ferguson says his agency has the resources to take on big tech and other industries, telling us the Trump administration wants to foster innovation.
I think if you are a big tech company, you should be getting your lawyers to give you great advice on complying with our competition and consumer protection laws. Look, I don't have a particular axe to grind within the industry, but I do think it's very important that the FTC devote its resources to the markets that Americans most frequently engage with. It's not just big tech, although that's definitely one of them. It's also healthcare, and it's protecting Americans as laborers. But no matter who you are, I think it's important to proceed like the FTC is a vigilant cop on the beat. We're surveying the markets. We're looking for competition problems. We're looking for violation of the consumer protection laws. And if we think they're there, we're going to go to court. But most importantly, if we don't think that there are problems, it's really important for the FTC to get out of the way. Again, one of the most consistent complaints that I've heard about the previous administration was a lack of certainty and a tendency to want to do a lot of regulating. The FTC, we're not regulators. We're cops on the beat. We police for competition problems and consumer protection problems, but we're not trying to regulate the economy. We want to create economic conditions that allow, companies to innovate, to grow, and to help lift the whole country out of this debt crisis and bring about the golden age that President Trump has promised the American people.
Talk about striking that balance, because many would say, if I look at Europe, they regulate too much. There's too much enforcement. But in many ways, they're being a strict cop on the beat, some would say. So from your perspective, are you seeing over-regulation in Europe? And is there a worry about stifling innovation in the United States by the amount of focus you have on big tech right now?
Well, I do think that Europe has a real regulatory problem. It has an innovation problem. And we definitely don't want to create conditions here in the United States that suppress innovation. But I think it's important to bear in mind, monopoly suppresses innovation. Monopoly makes it very difficult for little companies with the next great idea to sort of rise. And I think it's very important, if we want to sort of preserve the American innovating spirit, that we create conditions in our economy that allow little tech, who have the next great ideas, the next life-changing ideas for all Americans to thrive. President Trump has been pretty emphatic on the importance of making sure that our economic system allows little tech to bring its ideas to market. And that's what antitrust really does, is it prevents monopoly, and monopoly stifles innovation. So if the antitrust cops are vigilant and are making sure that they're protecting us from competition problems, it allows the innovation that has made America and our economy sort of the driving engine of the whole world.
What deals do you think can get done? Is there any prescription you can give as to this M&A will look good if you are a big tech eyeing a little tech?
I think that the deals that can get done are the deals that are lawful. And I think the most important thing I want to take away from this is I see it as my job to scrutinize deals consistently with the timeline Congress created in our antitrust laws. And if we think that they are illegal and we think that we can win in court, we're going to go to court. But if we don't think that they are illegal or we don't think we can win in court, the FTC is going to get out of the way. Again, I've heard this complaint a lot from the business community that in the previous administration, a deal would enter the FTC and it would sort of disappear. And sometimes it could disappear for months while, novel ideas were floated, different theories. And sometimes it sort of seemed like the FTC was hoping that deals would die on the vine while they waited for regulatory clearance. I want nothing to do with that. If a deal is illegal and I think we can win in court, I'm going to go to court. But if it's not, we're going to get out of the way and we're going to let deals go forward.
FTC Chair Andrew Ferguson speaking with Bloomberg's Caroline Hyde. Plenty more ahead. Keep it here with us. This is Bloomberg. Welcome back. The Trump administration has its hands full with geopolitical tensions around the world. President Trump is preparing to talk to Russia's Vladimir Putin later Tuesday about a ceasefire in Ukraine. Meanwhile, the truce in Gaza has just been shattered by Israeli military strikes on what it says are Hamas targets in the devastated territory. For more, let's bring in senior editor Derek Wallbank. And Derek, put this in perspective for us. This is, I guess, the fiercest bombardment since the truce.
Yeah, that's right, Haslinda. Look, the fragile peace that has been there for a little bit is clearly off right now. We do have increased strikes that are going on in Gaza. The U.S. was notified about this move ahead of time, suggesting that there's no friction between the U.S. and Israel on this issue. Look, Donald Trump had said very clearly that he wanted hostages released. He wanted them by a time certain. That didn't happen, and so they're not going to stand in the way of this action. At the same time, there are claims that Israel didn't do all of the things that it ought to do. Regardless of where the blame is allocated, this is sort of the situation that we happen to be sitting there right now. And it comes at the same time, mind, that the U.S. is launching its own strikes on Houthi targets over shipping in the region.
In Yemen in particular, I'm just wondering what this all means for the situation in the Middle East and how the Arabs are now looking at it.
Well, it's going to ratchet tensions up. There's no question about that. I think there's going to be a real key question as to whether or not this is short-term or whether or not this lasts, if there's a way to get parties back at the table. Certainly, everyone was trying to get to sort of a durable peace, but we weren't there, and we weren't there at a position where some of the key needs were being met. So I think that you know, is this a temporary conflagration, or is this something that spirals bigger? That's always the key question, isn't it?
Of course, we had Qatar, Egypt playing a crucial role in that truce. All this happening at a time when we're awaiting that meeting between Trump and Putin. I mean, put that in context for us. I mean, what can be achieved? What conversations are likely to be?
I mean, it's a tremendously consequential conversation that's going to happen between Trump and Putin. And I think that this is going to be one that everybody's watching, particularly in Ukraine, particularly in Europe. Trump was talking about, he told reporters on Air Force One that land was going to be one of the key talking points, literally territory. And I think that raised a lot of questions in Europe over exactly what Trump might be willing to give up on Ukraine's behalf. I think that has been one of the critical things that European allies have been worried about, is that Trump might give away too much. He might do more than Vladimir Zelensky in Ukraine might be willing to accept, and where does that go? At the same time, honestly, Haslinda, one of the things to watch for here is whether Vladimir Putin goes for a ceasefire at all. He has so far been resistant to do that. He sees there are Russian gains on the battlefield. And so will he actually stop the missiles and the bombs and tell people to pull out? That's really a live question. I'm not sure what the answer to that's going to be.
Our conversations with our guests have been that Putin probably wants to just buy time, that he is not the one who wants the end to this war. What are the views out there?
Yeah, I think there's been a long idea that that the way to get Putin to actually do this would be to help Ukraine's position and make Putin feel like he was losing. As long as he feels like he's winning, then, you know, there's a balance of proposition that if I just continue, the situation will be better for me, and dragging out talks gets me into a better negotiating position. Is Trump going to be able to come to the table and convince the Russian leader that that's not the case? I think that's going to be one of the most critical things to see whether or not there is actually a peace. And if you're looking at it from Ukraine's perspective, they would say that the actual invasion was 10 years plus ahead of time. You know, do you get to a peace that is durable beyond a couple of weeks, months, maybe even years, to something that actually sets the future for being able to rebuild?
Derek, thank you so much for that. Bloomberg Senior Editor Derek Wallbank. Let's get more perspective. Bring in Benedikt Franke. He is Vice Chair and CEO of the Munich Security Conference, a global forum for debating international security policy. Good to have you with us. How consequential is this meeting between Trump and Putin?
I think, as Derek has just said, it's incredibly consequential. We will now see whether Putin is really willing to end this war. Let's just remember, he is the only person that can end it in a heartbeat. So given that President Trump has staked much of his international credibility on ending the war in the Ukraine swiftly, I don't think we can overestimate the importance of this call.
What do you think Putin really wants from this?
I think at the end of the day, Putin wants what he has said he wants all through this war. He wants to win. He wants to have as much of Ukraine as possible. And hence, it'll be very interesting to see whether this discussion will focus on the process. So how are we going to get closer to a peace, or on concessions, on, as Trump said, assets like the Zaporizhzhia power plant and territory.
What do you make of Trump's embrace of Putin and Russia, which is such a breakaway from what the U.S. has been practicing for years now?
I think there is this theory of a reverse Kissinger out there, meaning that by pulling Russia closer to the U.S., he is trying to pull Russia further away from China, trying to drive a wedge in this unholy alliance between Presidents Xi and Putin. I'm not yet fully convinced that that is really what we're seeing.
Benedikt, would you say that however you look at it, Ukraine will be the loser? We've already talked about how Trump and Putin are talking about, how assets should be divided. We saw how Trump treated Zelensky at the White House, literally kicking him out. Is Ukraine the loser, whatever happens?
Let's not forget that Ukraine is the victim, first of all. And they have suffered a terrible war for the last years. And I think it's now all about ending this in the best possible way for the Ukrainians. But also, let's not forget, it is the Ukrainians that must decide. Any deal that will be done behind their backs or at their expense will not be sustainable and will not work and will damage President Trump's credibility.
But realistically, what is the base case scenario for Ukraine right now?
I think the best case scenario for Ukraine right now is a clear path to peace that does not give the territory that is currently held by Russia all to Russia for eternity, but there is a process where people get to decide their fate, and there is a process led by the Ukrainians themselves.
And how much sway will Ukraine and perhaps Europe have in ensuring that happens?
I think you've already heard some voices from Europe that whatever the outcome is, that is accepted by the Ukrainians. The Europeans will support and will also help to enforce, if necessary, even with boots on the ground.
And the next question is the boots on the ground. Some have suggested that perhaps the Chinese boots on the ground would be what would be the eventual picture that we see. How palatable is that to Russia? How palatable is that to Ukraine and Europe?
I don't think it's very palatable, to be perfectly honest. This is a war in Ukraine. This is something in the immediate neighborhood of Europe. It should be Europe stepping up. At the same time, we have seen over the last decades the UN Department of Peacekeeping Operations sending blue helmets across the world. So potentially that is a way to include nations from further abroad, like we've seen in other conflict zones over the last couple of decades.
Benedikt, we just have some headlines to tell our viewers about. China is said to be scrutinizing Ka-shing's port deal for breaches. Chinese authorities are investigating CK Hutchison Holdings' sale of its overseas port businesses amid signs that Beijing is unhappy with the deal. That investigation is looking into potential security breaches or antitrust violations, and it is being led by the State Administration of Market Regulation and other agencies as well. Now, we're talking about a deal worth $19 billion. It's drawn criticism from Chinese officials and politicians who accuse Hutchison of spineless groveling to U.S. pressure. Of course, this has a geopolitical angle to it. Just to continue our conversation, this peace plan, what would a secure peace plan look like, you think?
I think from a Ukrainian perspective, it would not exclude a potential NATO membership down the road, and it would certainly also not exclude a membership in the European Union. I think both of those things would make any deal sustainable.
Given what has transpired so far, given the actions by the U.S. so far, is the U.S. still a reliable ally? How should countries like those in Asia look at the U.S.?
I think that we shouldn't overestimate what is currently going on, particularly in the media, on U.S. reliability. When I look at the actions against the Houthi rebels, when I look at that it is the U.S. administration that is making the moves on a Ukrainian peace plan, when I look at all the other things that are ongoing, the meeting with NATO Secretary General Mark Rutte in the White House a couple of days ago, I don't see a disengagement. I don't see unreliability. Yes, I see many decisions taken in a short space of time. I do see increasing uncertainty, but I don't see unreliability.
Would you say that something good has come out of it? Europe now is looking at taking responsibility for its own defenses?
You see, I think we've seen many wake-up calls in Europe in the past decades. This one was a particularly loud one. Let's hope Europe does not go back to sleep. The first signals are very positive. You've seen Germany changing its constitution or planning to change its constitution to spend a lot more on defense. You've seen Ursula von der Leyen and the EU Commission speaking about an 800 billion euro package on defense, and you see some very clear moves towards increasing the defense industrial base across Europe. So I'm a lot more positive on that than I was in the past.
A lot of questions about the international rules-based order. Who can step in? Who can help to ensure that it remains intact?
See, I think there are a couple of people and countries and regimes that would question the premise of this. Is it still intact? Do we still have a rules-based order that is working? And if it is working, is it working for all? I'm here in India today speaking to countries like India, Brazil, South Africa, and others who do want to see massive reforms to this international order. They are unhappy with our insistence on rules that they had no say in creating, and that we, the West, aren't very good at sticking to ourselves. So one of the possible effects of the Trump presidency may be a new dynamic in this reform efforts, and we may actually see a UN that is becoming more efficient again and that is becoming more relevant again to the actors out there.
And do you see China capitalizing on the situation?
Certainly. I do remember the speech by J.D. Vance at the Munich Security Conference was followed by the speech of Wang Yi, the foreign minister of China. And he very gleefully looked at this bombshell that J.D. Vance had dropped on the Munich Security Conference on the West in general. And I think he tried his very best to present China and himself as a pole of stability, as an alternative offer to American leadership.
Benedikt, thank you so much for your insights. Benedikt Franke of the Munich Security Conference. Now, as we reported earlier, Bloomberg has learned that Chinese authorities are investigating CK Hutchison Holdings' sale of its overseas port businesses. This comes amid signs that Beijing is unhappy with the deal. For more, we're joined by our China correspondent, Min Lo. Min, put this in perspective for us.
Yes, so according to sources, the Chinese authorities have been looking into this deal. Senior Chinese state leaders have been asking several state departments, including the State Administration for Market Regulation, to look into this deal for potential security breaches as well as antitrust violations. And this comes after we had seen several scathing commentary from state media from the Hong Kong, Macau, and the mainland Hong Kong and Macau Affairs Office criticizing Hutchinson for selling out the Chinese people and saying that it is the company is a spineless calling the company calling out the company for its spineless groveling and selling this firm under U.S. pressure. And this has largely been seen by investors as a pretty good move on Li Ka-shing's part, because he's getting about $19 billion for selling 43 of these ports around the world in 23 countries to Blackstone Group at a time when the conglomerate has been facing increasing pressure, geopolitical headwinds and trade barriers for continuing to operate. And this really shows the risks of companies, even Hong Kong companies, that could be facing the wrath of the Chinese government at such a time. And the questions around what sort of future this company would have when it comes to its operations in China, given that the Chinese government and state media has published these editorials that are criticizing the future of this company in China, saying that it bears the blame of history for selling this company at the behest of U.S. pressure.
And as we speak, we're seeing Hong Kong stocks currently down about 4%. Min, the question really is what China can do to stop the deal, because we know that the sale is being done outside of China.
That's right. The sale is being done outside both Hong Kong and China. So the Chinese government actually may not have the legal basis to block this deal at this point. And sources are saying that the scrutiny from the government may not necessarily lead to any action, and that at this point, any deal of such scale, it would be quite normal and usual to attract regulatory scrutiny from China and elsewhere in the world as well. So at this point, not clear what else the government can do. And the company is also quite insulated because it gets about 12% of its revenue from mainland China and Hong Kong. The rest of its revenue derived from other parts of the world, including North America, Europe, and other countries. So for now, the company appears pretty insulated. But again, if the company wants to expand its operations in mainland China, that is where perhaps they may be facing regulatory barriers from the Chinese government if it falls out of favor with the authorities.
Min, thank you so much for that. Bloomberg China correspondent Min Lo in Hong Kong. Let's take a look at how Asian equities are doing right now, tracking gains in the U.S. and optimism. Perhaps China is seeing a reversal in terms of its economy. Also pretty much a picture of a tech run-up in China. MSCI Asia Pac Index currently up by 0.8%. HS Tech is up by more than 2%. That is it for Insight. Horizons Middle East and Africa is next. Keep it here with us. This is Bloomberg.